right, good morning everyone. Let me know if you can hear me. My name is John Paul, founder of DayTradeToWin. There should be a chat box there where you could go ahead and post your questions and answers. This is a live event, so you can go ahead and ask your questions. All right, we have Ben, Daryl, Fahim, Greg, Joe, John, Keith, Christian, Remy, Victor, Todd, Tamer, Robert, Vic, Patrick. All right, everybody, Nina. All right, so what we're going to do today first, for those of you who may be new to trading, is focus on looking at price action. Today I'm going to show you the signals, looking at yesterday, what happened, kind of get a general sense of what the market is doing. If you're a seasoned trader, I encourage you to ask questions as well, since you have me here. We do have a lot of good things here on the website, especially for those of you who are interested in, for example, downloading the news indicator. You can download that as a free trial if you come here to courses and software and go to downloads. We do offer here the news indicator for NinjaTrader 8, so if you haven't downloaded that already, you can download that for free. It's a free trial. We do include it with most of the products, so if you purchase the Trade Scalper or the Atlas line, we probably give that to you anyway for free as a lifetime license. We also have, I think, a good variety on the blog of topics that you may be interested in. So for example, if you want to learn how to trail a stop, if you want to learn about orders, we do have, if you do a search, you can have a wealth of information on how to place orders, what is a stop order, a stop with limit, a market if touched order. You just do here a search and you'll find all of the information that you need. The other thing we have here, besides the blog, is we have a videos list of trading videos. We also have reviews and testimonials. So these are areas where if you haven't investigated the DayTradeToWin site, it's a pretty in-depth site, and I encourage you to investigate it. And you can always contact us here at the Contact Us page here as well. Or you can leave a message, give us a call. We're happy to answer your questions. I want to make sure that trading is the right fit for you, especially the type of trading that we do. Now, if you're looking at the markets, there are a few things that I like to do. So we have the Trade Scalper, and the Trade Scalper is a method of scalping numerous times throughout the day, let's say 3, 4, 5 days in a row of just taking either 3 or 4 trades a day, or maybe you want to trade 20 times a day. Now, I don't think that trading 24 hours a day is the right thing to do, so I'm not stuck to the computer, but once you've traded 5 or 6 times, and if you're up and you have some gains, some profit in your account, it's time to stop. And the more you trade, obviously, the more risk that you're subjected yourself to. So the goal isn't to just trade all day long. It's really to focus on the good setups, the good trades. A few times a day is really all you need to start off with. Besides the Trade Scalper, you can read all about it here. We have videos, and here are the courses, the course example that's included with it as well. We do have the Atlas line, and the Atlas line is something that a lot of people ask me, what is it, or what does it do, or how does it work? And I'll show you the Atlas line today as well. So the Atlas line is not something that is a moving average or any type of MACD or indicator or anything like that. The Atlas line is something a little bit different, where it focuses on the tangent and the cotangent of the price and the trading, and it calculates this formula, and it looks at, after we have the Atlas line plotting, this is yesterday, it looks at whether or not to be a buyer or to be a seller, depending on if the market is trading above or below the Atlas line. So what we're looking at here is price trading below the Atlas line right over here. All right, Todd, if you have any sound issues, I'd recommend exiting the room and re-entering the room. Usually that helps as well. So if the price is trading below the Atlas line, what we're doing is looking at selling the market. If the price is trading above the Atlas line, we're looking at buying the market. So the idea is to first know the direction. If you know the direction, it's half the battle. So looking at this as the market is trading above the Atlas line, we are and want to be buyers. If the market is trading below the Atlas line, we want to be sellers. Now, knowing the direction is only, like I said, half the battle. Instead, let's focus on price action to get us into the market. So, as an example, one of the rules for this main signal is after we have a crossing of the Atlas line or we have 2 consecutive candles closing, I want to be a buyer or I want to be a seller. So the reason for this signal short here on the software is because we have the price beginning to trade and having a closing price below the Atlas line. And that's the exact price here on the euro to go short. Now if I look at the E-mini S&P, it's one of my favorite markets. The idea is the same. I want to be a buyer when the market is trading above the Atlas line here in the E-mini, and I want to be a seller when price is trading below the Atlas line. But again, we have to use rules to dictate whether we go long or short. And so as part of the program with the Atlas line, it's not just the software, it's the training as well. So when we have, as an example, 2 consecutive candles closing above or closing below, it fires off a signal. So that's one of the signals. The other signal that the Atlas line produces, if you look here on the back end here of the Atlas line, it has a bounce trade, it has a pullback trade, a strength trade, it has a checkbox here if you want to use the pullback and strength trades as part of the signals. You can use the average true range, the ATR, which is down here, as a filter. And really what that means is when the market's too slow, we shouldn't be trading. And typically I say if the market is less than 3 or 4 ticks, you don't want to be trading on a 5-minute chart. On the alert wave file, this is a sound indication. So as soon as we have a signal, you can hear an audible alert. You can have any sound that you want linked to this. And you can adjust the text size and all the colors and all that good stuff. But ideally, there's no optimization required. So regardless if you're using E-mini, NASDAQ, Euro, the currencies, the FDAX, the FTSE, it doesn't really matter. What we're looking at is price action first and foremost, and using the Atlas line to tell us, should I be a buyer or should I be a seller? And then you can trail a stop and all that good stuff. Now the S's that you see here, these S's are telling me that there's strength in the market and to sell it. Just like here, there's a pullback in the market to sell it. And here's strength in the market to sell it. And so on. A pullback in the market to sell it. So what you're seeing here with these additional signals are additionally to buy or to sell as the market continues in your direction. And every trade that you see should be and continue to be lower and lower and lower, because the health of the trend, if you're thinking about price action, really matters. So if there's a trend, we're not going to be selling as the market is going up. We're going to be selling as the market continues to go down. Or as the market continues to go up, we're going to be buyers. So part of the equation here is built in with the Atlas line is signals will only be fired off if the entries are higher than the previous entries. It's part of the program as well. And this is all taught in the course. Once you log into the members area, there's videos, there's training videos, there's live training that happens every Friday. So we try to make this as intuitive as possible for traders, new traders, or more seasoned traders that want to get a little bit more advanced. We really try to assist with that. So this is the Atlas line. This has been trading for probably about 10 to 15 years. It's very strong. Sure, you're going to have some days that the market flip-flops. Let me see if I can find you a situation where I don't want to just focus on the good. I also want to show you where things can be problematic, and the Atlas line can probably help you in that fashion. So let me see if I can find an example where there's also trades that don't work. So all these trades that you're seeing, this happens to be on June 28th, was successful. So this one, to go long, we look at the ATR here on the expectation, 3-4 points, and the market went up at least 3-4 points. So that's really the goal, knowing the target, using the ATR for a specific target, specific entries, and the direction. Am I going long or am I going short? It doesn't have to be complicated. I think if you look at it as simplistic as you see it here, price crossed the Atlas line, there's a short signal. What's my target? Target is at least 1 times the ATR. So here, 2 points, 1.5 points to start off with, and away it goes. The same thing here with this long signal when it crosses back up. And then, like I said, strength trades, pullback trades, all additional opportunities to buy or to sell. If it continues, that is, if it continues. And so remember, if price is trading above, I want to go long. But there are situations where, I'm just going to go back another day, see if I can find a situation where we have more of a flip-flop, because the problem with trading as well is not just looking at all the good that happens. We have to also understand when the market is chopping or flip-flopping. How do we handle that? So what I like to do as a trader, if the market is not going in my favor, we have to have some type of protection or stops or a rule-based management to say, let me get out of this trade. So let's take, for example, this short signal here. This happened about 2 o'clock Eastern Standard Time, and this is a short signal, 42.6675. And again, I don't make this complicated. You should know that the signal to go short is going to happen because first, the price is trading below the Atlas line, and second, we have 2 consecutive candles closing below the Atlas line, and that will fire off a signal. So that automatically tells me that we are going to go short. I just have to wait until the candle closes. So this candle right here, when it closes, I know there's going to be a signal. The closing price of this candle is my entry to go short. So 42.6675 is my entry to go short. Very simple. It's not complicated. It's basically saying I'm selling it at this price, waiting for the candle to close. Then I look at the ATR and I say, well, ATR is kind of slow. It's about 1.25, 1.5. That's my expectation. So in reality, this is the only thing that we know at the moment, right? That's it. We don't know anything else. We know that this is the closing price. This is 42.6675. Coincides with the text, the signal that appears. I look at the ATR, it's 1.25, 1.5, a point. Even if you just want to take 3 ticks, I'm selling it to go down. That's my goal, to do that. Now, if the trade doesn't work, how am I going to get out of this trade? Well, I like to use a time-based stop. You've probably heard me say this in most of my videos. Protect yourself with time. Protect yourself with a catastrophic stop. So if the market has some type of catastrophe, some great news comes into the market, and instead I see the market go up, there has to be some type of catastrophic stop in place to protect you. There's also a prove it stop. So I'm looking at this in 3 ways. Whether or not the trade goes in my favor and makes me some money, I need to be out of this by time, by proof, or by the catastrophic stop. So I'm protected in those three ways. So as I go forward here, the next candle goes straight down. So again, I already know what I can expect from here to here. Let me just do that. The market went 1 3/4 of a point. Remember, and this is all taught, if you're new to trading and if you're wondering, well, what's the ATR, or what, how is he calculating the target? And just to give a quick understanding of it, this indicator, the average true range, it's called the ATR, is on all charting platforms. So it's not specific to NinjaTrader or TradeStation or any other trading platform. Most trading platforms have the ATR. And so I'm using a setting of 4, and I'm using a 5-minute chart. So basically, this calculates the last 4 candles and tells me what can I expect the market to move in the next 4 candles. So right now, I can expect the market to move about 1.25 within the next 4 candles, and that would be my target. Does that make sense to everybody? Just to be clear on how the understanding of price action works in coordination with expectations, and I can't expect this market to move 10 points, right? I can only expect it to move 1.25, and then I can trail a stop, or then I can, find out if I want to hold on to it. But essentially, thank you, Christian. So essentially, I say to myself, yes, I'm selling it at this price. Here's my target. Catastrophic stop is typically 2 times the ATR, so I would risk 2.5 points, but never more than 5. I never want to risk more than 5 points on any trade. So you're looking at a catastrophic stop of about 2.5 points, and a prove it stop would be if any candle closes on the opposite side of the Atlas line. That would be my proof, or my prove it stop, to get out of the trade. So when I look at this and I say, well, I'm going short, but if this doesn't go down and instead a candle closes above the Atlas line, it could be by a tick, 2 ticks, 3 ticks, I'm immediately out of the trade. So the catastrophic stop is there as a last resort. The prove it stop will get me out at a smaller loss, so you're not always risking just one hard stop. And the time-based stop is also win, lose, or draw, typically 4 or 5 candles after you enter. If you're not in profit territory, or if you haven't made your target, or if you're still in the trade, it's still kind of flip-flopping and not going in your favor, out of it. You're done. You're calling it, calling the trade over. We're looking for the next trade, whether that's scalping, whether that's another Atlas line signal, pullback strength trade. We're finished with this trade. And I always think, as a rule of thumb, the longer that we're in a trade, the longer it takes for a trade to develop in your favor, the worse off it is, and to a certain degree that you were just holding on and waiting, and I hope it's going to work out, I hope it's going to turn around. Usually within the next 4 candles it should go in your favor. And the reason is we entered for a specific idea. Based on rules, we entered for this reason. It should materialize immediately. We shouldn't see this finally go in our favor an hour later. It should be almost immediate. And so that's the idea. So we have 3 ways to look at this. We have the entry, we have direction, we have the stops. And that way I know exactly what I'm going into before entering the trade. Now, if the ATR is too slow or the market is too slow, I know, because the ATR shouldn't be anywhere near 2 ticks or 1 tick, or should be at least a point, maybe 3 ticks at the bare minimum. So I know if the market is tradable. And when it's too volatile, on the E-mini S&P, 5 points right here would be where I say it's too strong, I have a lot to lose here, I'm going to wait until it slows down. So we do have thresholds as well where we say it's worth trading or it's not worth trading depending on the conditions. Typically, if you look here at the market, we can expect the market to be anywhere between 1 and 5 points normally. So this is where we want to be as a trader. And this is just for the E-mini S&P. It's different for other markets, but this is where we want to be on the E-mini S&P. And you can see that typically this is normal, but as soon as it starts to trade a little bit more volatile or stronger, it becomes riskier because we have more to risk as well. The ATR doesn't work on range charts. That's correct, Greg. So if you, and I'll pull up the trade scalper here in a second, and I'll show you something as well that you still can use the ATR with a range chart, but there's a specific way to do that. And I'll show that here in just a minute. But before I do, let me know if anyone has any questions on really the idea of using rules, using stops, using direction. I would consider that more price action. We're not adding any moving averages or any MACDs or any stochastics or momentum. We're not using any of those things because those are more subjective than anything. You know, weighted moving average, EMAs, SMAs, all those things, you know, you could really go back and curve fit data. You can say these are the values that worked great in the past, but moving forward, they're not going to work into the future. So I like to use something that's not subjective, that it doesn't have to be optimized constantly. You know, it worked yesterday, let me change the number so it works tomorrow. It's always the same, and then use price action. If you look at this long signal here at 42.69, again, I know the reason for this signal. 2 consecutive candles closed above. It fired off this signal at the closing price of bar number 2, right? So I know exactly why I'm entering. Prices above, closed with 2 consecutive candles. And then I start my time-based stop, prove it stop, catastrophic stop. So this is 1, this is 2, this is 3, this is 4. Now, 4 or 5 candles is what I say is a time-based stop, but if I haven't made any money by this point, I'm out of the trade. And that's how I like to look at it. From here to here, the market should already be in my favor. And if not, I'm out of the trade. If it closes below, I'm out of the trade. Prove it stop. If the market just goes straight down and instead just decides to do a nosedive, I have my catastrophic stop in place to protect me, as a catastrophe may always happen in the market. All right, so let me know if you have any questions on that. And these are all bounce trades. So not that I push the bounce trades a lot because there's so much that I'm looking at. with already strength, pullback, the main signals, maybe scalping. But you see these candles here, this one, this one, this one, this one, and maybe even this one. They're bouncing off the Atlas line to the upside. This is would be considered bounce to the long side. So let me show you what that looks like, and I'll just change or turn on the signal for bounces. So I'm going to come here to the Atlas line back end of the software. I click Atlas line bounce, I click apply, and you see here all of these signals are saying it's bouncing off the Atlas line at this price, go long, go long, go long. So this is not something that I have on the chart always, because I think it clutters the chart with too much text. So even though I think the signals are good, and I want you to, and we teach this, so it's not something that's a surprise. It's a bounce off the Atlas line, and the signal will fire off. It's not something that I want you to add to the chart, especially those of you who have the Atlas line know this because you've been through the training. But you can see the signals that are telling you to go long because the market is bouncing off. And the same thing, this one is a bounce to the short side, and so is this one here, and so is this one here, and this one here, bounce to the short side. Just to show you a little bit on the signals that it generates. All right. Right, so Larry has a question here. How do you get out of the trade if a market moves against you heavily, right? Very strong, right? So how do you exit the market moves strong against you in your position? So when you enter into a trade, I like to use already the ATM strategy. If you're not, are you familiar, Larry, with the ATM strategy or having the targets and the stops placed for you automatically? NinjaTrader offers that, and I think a lot of other trading platforms can offer that as well. So as an example, let me just bring up here the simulator dome to show you what I mean. So if you look here and you say I want a 4-point target's a little bit strong, but let's say you want a 1-point target, and you can calculate a 1-point target. I never want to risk more than double that, so a 2-point stop. So you come here to edit, and you say immediately 8-point stop, a 4-tick target. When you click buy or sell, it will enter into the market, whether you use a limit or stop or a market of touch, and then it'll place the stops and the targets for you. But they should be relative. This is a very important term, relative to the current conditions. So to answer your question, how do you exit if the market moves strong against you? The stops already in place. They are automatically placed for you. So if you look at where we are right now, currently, this is a short signal, 42.8175, right? This is the Atlas line for today, right now, live. If I enter 42.8175 and you look at the ATR here at 3 points, based on what you know, what I've just gone over right now with you, it should be a 5-point stop and a 3-point target, right? So I come here and I say, well, I'm going to go with the one closest that I've created here. We'll use this one here, and this is a sell, so I'm just going to sell it just to give you the example. So now I'm short, and if you look on the chart trader says 4 points for a target, and then the 5-point stop. Now, obviously, the ATR is a little bit different, right? It's not 4 points, it's 3. So I would come here, and I would 1, 2, 3, 4. Instead of making it 4 points, I make it 3. And the same thing here with the stop. Instead of making the stop 5 points, if I need to adjust it, I could adjust it at the same time. So the question is, how do you exit the market if it goes against you? We have already our stops in place in case that does happen, but it's based on the current conditions or the ATR. That's what it's based on. It's not as if I have an open stop where it just can go 10 points against me and then I decide, oh, what am I going to do? I'm always going to have something in place that protects me, but based on the current conditions. So I wouldn't use a stop that's just 2 ticks or 3 ticks or 1 point because the market's too volatile. It has to be relative to the current conditions. Now, if it closes above the Atlas line and I'm able to get out at a smaller loss, that's the prove it stop, then I'd be out of the trade. All right. Larry? So that's how that would work. Now, after 4 candles, let's say it doesn't work after 4 candles, I just click the close button. And so it could be a small loss, it could be a break-even trade, it could be a small win. It doesn't always have to be the catastrophic stop. And I think that's what a lot of traders, when they see me trade, or when they think about, wow, he's got a stop that's a little bit larger than most, it's only to keep you in the trade. It's a catastrophic stop, right? In case of a catastrophe. Instead, use the time-based stop and the prove-it stop or something else to get you out if the market doesn't go in your favor. So it's really the idea of, these are the conditions, let me have a stop that's a little bit larger than those conditions to keep me in the trade if in fact a catastrophe happens. All right, Larry? Let's see what else we have. Let me see, I'm not sure if I sent these questions. I'm just forwarding the questions to everybody here in case anybody has any wants to add anything to it. That's right. Well, it's not always 2 times. It's a maximum of. So if you're looking at the current conditions, let's say the ATR is at 4 or 5, you can't double that. That's just too big of a stop. You max out at 5 points, Larry. And actually, it should just be a little bit larger than 1 times the ATR. That's really what it comes down to. All right. So that's how I keep myself in the trade. I don't want to get out of the trade just on random movement as the market just gyrates up and down within a certain range. I want to make sure that I'm just beyond that to keep me in the trade. Could you adjust the chart, trader, as well on the Superdome and on the chart as well? This is for Jason. So yes, Jason, you can do that. So if you look at, for example, adjusting on the chart trader itself, moving this up or down, you click on it, or you can move this up or down like this. So this is, kind of the same thing, working from the chart trader or working from this here. It works in the same way. This is for Jason. Jason, hopefully I answered that question. Could you adjust the chart trader as well from the Superdome? Or yes, the chart trader is added to the chart. You click on or click off, or you click over here in the chart trader. There's a menu here where you can do the chart trader right from the chart itself or from the dome. So I like the Superdome personally, and so that I can adjust everything on the Superdome. And after the market makes a significant amount of target, let's say, or of profit, and it comes back to break even, there's nothing wrong as being a good manager of the trade to just click close, right? I mean, if the market just misses my target and I didn't get filled for whatever reason, maybe I'm using limit orders, not enough traders, there's nothing wrong with clicking close just like this. You're limiting your risk. You've said, well, it almost made my target, or it hit my target, or whatever the case may be. There's nothing wrong with closing out the position as well. All right, very good, Jason. So for Jason, Larry, Christian, Ben, everybody else here in the room, let me know if you have any questions on anything I've done so far. And by the way, you can look at the signals or the orders that you placed on the chart. If we come here to data series, right click on the chart and choose data series, and down here it says plot executions. You can go ahead and click markers only or text and markers. This is something I get a lot of questions on how do you put the labels on the chart. You can see those are the entries and exits for whatever type of trading that you're doing. You can see whether it's practice or live trading or sim. This is, I think, good to have, because then you can see where I entered, where I exited. Part of trading isn't just, buying a course or software and, going live the following day. Trading, I think, takes a little bit of study, practice. We offer the NinjaTrader Simulator for free with live data, so you don't have to spend any money on data while you're practicing before going live, and I want you to practice. So the important part of this is not just, buying a course or software and then say, here you go and good luck. It's take the time, ask questions. There's traders for the last 3 or 4 years that email me out of the blue that bought the Lifetime Atlas line or Mentorship even 3 or 4 years ago and say, hey, I saw this in the market. I've never seen this before. Can you help me, answer this question? And that's part of the Day Trade to Win philosophy, is helping our traders, not just now or 6 months, but any questions, any times. into the future that you may have. So it's nice to see that the traders that I've worked with over the years are still looking and using my software, as well as trading and asking questions. So those of you who are new to trading, this is not, our organization is not, an overnight pop-up startup. We've been around for 12 plus years. Let's take a look here. Dejan? You got it, Christian. Take care. Say hello to Leroy for me. Yeah, so I'm sorry, you guys want to see the scalper, right? So let's take a look at the scalper here. This is the trade scalper, and so this is a unique chart, right? So let me just open this up here. So what you're seeing here on this chart here on the trade scalper chart is not the typical trade scalper chart you've probably seen in videos. It's the same software, and it's the same method, right? You learn the method. I'm big on teaching the method, so it's not as if you're looking at anything black box. But there's a different aspect to what you're seeing, and this goes back to the question. I forgot who asked the question. I think it was Ben. Did you recommend having both the trade scalper? No. And I would say yes, Ben. You can have both on. If I didn't answer that question, you can have both on, so that way you could in essence see, am I above the Atlas line to go long? Let me take all the scalp trades long. Or am I below the Atlas line so I can take all the scalp trades short? There's nothing wrong with that. And there's also nothing wrong with taking long trades as well when the price is below the Atlas line if you're just using that for scalping, because it's just a small entry in and out as well. So what we're looking at here, I think the question earlier, I forgot to ask the question, but can I use the range chart and the ATR, right? I forgot to ask that. If you're still in the room, let me know. So what you have here is something a little bit unique. So you can add the software, the trade scalper, on any chart. So whether you're using it on the range chart, which I like, or the 1 minute chart, you can use it on any chart. And what I've done here, as you can see it, is I've actually put the range chart and the minute chart in the same window, right? In the same area. So they're not in separate screens. I have multiple monitors, and you don't have to have that. And so the idea with why I'm doing this is, first, do I have a signal on the range chart, and do I have a signal on the minute chart, and can I find more opportunities, more trades, or are they happening at the same time? So let me see all the signals and make my decision whether I should buy or sell, having it all in one place visually. So you can see this is a long trade on the range chart, successful. It didn't fire off on the 1 minute chart. Here is a short on the range chart. It didn't fire on the 1 minute chart. So we have more opportunities in different ways when you do it this way, because you can take either the signal on the range chart or signal on the minute chart, or both, right? Again, you see here a signal double wick short on the range chart, but nothing on the minute chart, right? Now, when this happens, it's not a bad thing or it's not a good thing. It's just the software is calculating on different charts. When you come to what type of target you should have, this is where, and the reason why I have 1 minute chart and the ATR located below, because when this fires off, the range chart is telling me to go 42.8375 to sell it, right? 42.8375 to be a seller, and I'm using the ATR of a 1 minute chart to tell me the target or the expectation or the type of stop. All those things I'm using based on the ATR of the 1 minute. So the range chart is firing off the signals, and the 1 minute chart is telling me this is the target. 1 3/4 of a point, or 3 ticks, or 1.5 or, but I wouldn't try for 5 points. I would just say this is what the market should move, and I'd like to take a target closely resembling this value. So 1.83 on the E-mini, it's 1/4 point increments. I'm just rounding down to the nearest 1/4 point. So 1.5, 1 3/4 would be my expectation. What I don't want to do is I don't want to see, for example, a sell and a buy right happening at the same time or same general area. That's something I want to avoid. So if you look at software, we don't want to really see things that are conflicting. Instead, focus on the things that are all telling you we're going in the same direction. We have Atlas line long, we have trade scalper long, maybe we even have two different ideas here. Let me see if I can show you kind of an example. So this is the long 4281 and this is a long 4281. They are happening at the same exact pretty much time, I would say, to go long. I would say it's a great long opportunity. So you are not just looking at the range chart or the 1 minute chart. You're looking at both, or maybe if they are coinciding, but never trade if things are confusing. If we have so many signals, why are we going to risk taking a signal? I don't even know if it could happen where we have one long and one short at the same time on two different charts. I don't think that's really something you're going to encounter a lot, but avoid it. If you do see it, avoid it. So for example, here is a long at 4280 and here is another long at 4278.50. It's exactly the same on the range chart. These two here are telling me long. So I would say to you, great opportunity to be a buyer because both are happening at the same time, not even using the Atlas line, which you can do pre-market. You can set the Atlas line up for pre-market trading as well. But we're not even using the Atlas line. We're just going off the scalper. Over here, this is a short 42.79 and a quarter. Let's take a look here. 79 and a quarter. Right around here to go short. And by the way, if you see the little, I'm not sure if you can see it. There's a little triangle. Let me see if I can show you here. These little triangles here, like that. And like that. These little triangles are part of the software as well. So you can see that it's not just the text that tells you go long or short at this specific value. It's also little triangles telling you, like little markers as well. So I really like, Larry, the trade scalper. I use multiple methods, not just the trade scalper. I like the roadmap. I use a variety of things. The trade scalper is one of my primary focuses, definitely. So if you are thinking about the trade scalper, I think that's really all you need to start off with. I like to use more of a combination factor when I trade, using the Atlas line, using the X5 as well. And the X5 is included with the trade scalper. It's a bonus program, bonus method of trading. Price action. I like to use the roadmap. So I like to incorporate everything. Usually, though, the best thing is not to trade at all. Usually the best thing to say is let's put it all together and let's see if there's anything conflicting so I know to stay out, or if there's anything that may be in my favor in order to say, well, the market is going in my favor with multiple methods telling me long or short. I like that as well. 3 or 4 trades a day is all you really need. That's what I like to do, 3 or 4 trades. I don't believe that you need to trade, again, I said this earlier, 24 hours a day to be successful. Focus on, good, solid quality as opposed to just, taking every single trade that comes your way. I think it's more of a waste of time in doing that. I live in Florida and it's sunny here. I'd like to enjoy the sunshine a little bit instead of just being stuck in the office or in front of my computer. And I tell that to everybody as well. You don't have to, sit in front of your computer as a trader all day long from 9:30 to 4 Eastern Standard, the trading day to be successful. 3, 4 trades a day, 4 or 5 points, stop. There's nothing more that you could do except from that point on increase the number of contracts. You start off with 1, you go to 2, you go to 3. At 5 contracts, if you think about making $500 or $600 a day potentially, I would suggest that is enough that you should just say, okay, this is good for the day, let me stop. And the more you trade, I guess you can look at it as more opportunities, but I think of it as well as more risk. So I never think of trading more as better. I think trading more puts me in a higher risk as well. Larry, okay? Trading the news, you know, we have a couple of videos on trading the news, Robert. I would recommend, I don't have time to teach you the trading news method, but if you look on the blog or if you look at our trading videos, I have, I don't know, 10 or 15 videos on trading the news, and maybe the next webinar we'll do that. We'll do a trading the news webinar. I can teach you that method live. All right, Robert? So the X5 trade is not the BMW X5 in the same effect. It's a floor traders, it's called the Floor Trader Secrets Guide. It's called the X5 method. So the floor traders, when they come together, there's not any floor traders at the moment, right? Everything is electronic, but floor traders in the past would come together and manipulate the market and push the market and reverse the market. And this is what the X5 is all about. You don't need any software. You can trade it on any trading platform. I teach the method in full, so it's not, and it's very easy, but it's a way that the traders that exist manipulate the market, and we take advantage of that because we know how it's done. It's not taught really anywhere, and so the things that I teach are not things that you'll find anywhere else. They are very unique, and they were taught to me by floor traders and by insiders that I think had more of an edge than most traders that are out there that say, look, when this happens, it's because they're all manipulating the market. Look, when this happens, there's profit taking occurring because they're all now scaling out. And that's, again, part of the roadmap, what the roadmap does. And just to show you a little bit of the roadmap here, this is taught in the mentorship class. And mentorship, by the way, starts July 1st. We have a new class, and all of the courses and all of the software are included. It's a low price, so we put it as a bundle, as a package. It's just one price and includes lifetime software and lifetime access for everything. So we try to make it, if you guys want to really learn everything, join the mentorship, and includes all of the courses in one plan. So the roadmap here, let me just add it here to the chart. I haven't seen it this morning. I give you an example, DayTradeToWin software. These are all the softwares that you get, part of being in the mentorship. And roadmap, you don't have to do anything. Again, there's no optimization. And it plotted on the range chart, but that's okay. So what we're doing here, it doesn't really matter. What we're doing here is just lowering this here a little bit. So the areas that you see here, the roadmap, is unique. What it does is it tells you where the market is going to reverse or turn around or cause for concern. Okay, that's really what it comes down to. And so in mentorship, when we say there's a signal to buy or signal to sell, the next question should be, what's the reason for me not to take this trade? Is there something stopping me from taking this trade? Maybe it's a signal in the opposite direction. Maybe it's news. Maybe the market's too strong or too slow. And another reason is, are the traders about to take profit? So if you look at this here, the market is going up and up and up, and you're buying and you're buying, and traders are buying and they're accumulating. And the roadmap is telling you and plotting up here, indicating at this area, be careful, because if all these traders are accumulating these long positions, expect there to be profit taking and the market will reverse or stop and go down. So the last thing you want to do is buy it once it lands in this area. So what the roadmap does, at first it's a filter. It helps you understand that you shouldn't be buying the market at this specific price or this area at the moment, because something's about to happen, and it tells you this in advance. So doesn't happen immediately, so you're trying to scramble. It happens in advance. So this is plotting, telling you this is not the place where you want to be a buyer or get out of your long position. At the same time, let me see if I can find a long situation. So the market's going down and down and down. You're selling, you're shorting it, you're scalping it, you're doing everything as a seller. Once it lands in this area, for whatever reason, traders are now buying it back and taking profit. So I'm going to ask everyone a question. I kind of do this. Let me just remove this here so it doesn't confuse us. So I'm going to ask everyone a question. Is there something on this chart that will indicate don't be a seller? Because if you put on a moving average or momentum or MACD or any indicator, volume moving averages, EMA, and even if I remove this here completely, and I remove this completely, is there anything here on the chart indicating buy it? What do you think? There's nothing here that says I should buy the market. As a matter of fact, most of you would probably say, look at this strength. As a seller, I want to be a seller, right? Most of you would say sell it. And I would say to you, sure, let's sell the market only if there's nothing that will interfere with selling the market. So there's nothing wrong with selling it, right? But why sell it at an area where the market may reverse like this? And it's not based on any prior support or resistance. So if I look back here, there's nothing here that tells me prior support. Maybe this, if anything, I would say that's prior support. But there's nothing back here that I could be concerned with that is some major support value. And this is using the range chart, not even using a 5-minute chart or 1-minute chart. So if I click indicators and I go to my roadmap indicator, this will advise me into the future. If you're still trading short, be careful, stay out of the short position, or don't go short if it lands in the roadmap zone. So as soon as it landed in the roadmap zone, remember, this is plotting, right? This is plotting and plotting and plotting, telling you not to go short, and it reversed. So if you decided to take a short trade here, because those moving averages finally crossed, you're in trouble. That's the purpose of the roadmap, first as a filter. And then it also provides signals. So in fact, if the market lands in the zone and starts to reverse off of it, you're going to get a signal, right? It's going to say it's happening as expected. We want to be a buyer. It's a counter trend method, counter trend entry. Second, a filter to avoid you getting run over by traders taking profit. So if I sold one contract and then I sold another, and then I sold another, and I have maybe 5 or 10 under my belt, and finally the market reaches an area where I'm in profit territory, I'm not going to get out with 1, 2, 3 in the same fashion. I'm going to say, close out my position, all 10 contracts, just get me out now. I want to take my money and run. This is what causes the extreme reversals that we see. It's accumulation, and then the automatic, I don't want to say dumping, but the automatic closing out of positions in a hurry or in a rush to get you out of your position, to close out that position, to take money out of the market. That's what causes this immediate reversal. And it's the same thing here. As soon as the market, we're buying, 1, 2, 1, 2s, and then it's dumping at 5s, 10s, 20s, 100s. You can see it on the tape. If you look at the time and sales window, you can see huge amount of contracts coming through at these areas. But we already know these areas in advance. It's not as if we're looking at tape reading to understand that they're going to happen. And so if you look at this here, if the market reaches this price, you can probably look at this later during the day after the webinar is over. Take a look at if the market hits between 42.70 below 42.76, that we don't want to be a short, and it may just reverse on you. And the same thing here, as we start going up and up and up, we may see a reversal. All right, everybody. Questions? Making sure that I'm not going too far over anybody's heads explaining this. All right. So I'm going to close out the room here in just a minute. If you have any questions, if you'd like to learn more about the programs we offer, we have tons of videos. The all courses page, we have the Trade Scalper, the Atlas line, the At the Open 2 method as well. And we have the coaching, private with me, or a group setting certain days and times. Again, the next group mentorship starts July 1st, twice a week, and everything is included. And if you want to learn more about the Trade Scalper, you can visit the Trade Scalper page or the Atlas line or the ATO2. And feel free to email me or reach out if you have any questions. Yep, I use the at the open too. The news indicator needs to be licensed. So let me see if I have it licensed here on this computer. I'll switch to a 1-minute chart. So this is still the roadmap up and running on the chart. And you come here. I'm not sure, John, if you've ever downloaded it before. And we do have licensing instructions, or you can email us. We'll send you over to the right video that shows you. But the news indicator, if you click here, and if you have to download it and import it first, it should be indicated as DayTradeToWin News 4T, right? And you should see, I should have it here. I should be licensed. Yep. So you see here on the left-hand side, you see here, these are the news that are up and coming. And you may have to pick U.S. news, high priority, low priority. You know, it's pretty versatile, actually. And it is, so you can pick U.S. news only. I have that chosen. I have maximum news events 20. It checks every minute for a new upcoming news event. You can change the font size, the colors, all that good stuff. So this is the news indicator. It's a free download on DayTradeToWin. You have to license it so we can apply it to you, and it works for 6 months. Unless you're a current client, lifetime license, or mentorship, we include it for free. It's part of the package. Okay, but email us if you run into trouble, and if you're looking for it, it's over here under courses and software and downloads. You can download it right over here in this indicator. All right, everyone. Hopefully you've learned something today. If you have any questions, feel free to reach out. Again, July 1st, the next group mentorship starts. If you're interested, feel free to reach out. Take care, everyone. Bye-bye now. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the DayTradeToWin YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.